Hi, this is Dustin with Dustin's Dollars. Today I'm going to be talking about, let me get my light on. Today I'm going to be talking about Knightscope's acquisition of CASE Emergency Systems that was just announced today. I don't even have the headline up here, don't I? There you go, the headline. Before I begin, let me remind you that I am not a financial advisor or a financial professional of any sort. All opinions that I express in this video are mine and do not represent those of any company or any other individual. I currently hold a long position in Knightscope, so this video should be for your entertainment purposes only because I could be wrong about everything that I say in this video. You need to do your own research before making any investment decisions. So, this was a pretty big announcement today. Knightscope announced that they are acquiring CASE Emergency Systems. And I had never heard of them in particular by name, but CASE Emergency Systems is a company that, they make these stationary, blue light telephone systems basically for emergencies. They have a lot of these around at various places, and you call in, they call to law enforcement or whoever, security personnel, I guess. So they announced this today, and let's go through a couple of the details because the actual press release was a little bit light on the details, but there's some more in the 8K that was filed, and I wanted to talk through some of this stuff. So first of all, they acquired them. What do they pay for it? It's not really, I don't think it's even called out in the actual press release here. And I think that's a very relevant detail for any acquisition, right? That's a relevant detail when you're purchasing a stock. What's the valuation? And this is called out, in the actual 8K. And let me zoom in a little bit so hopefully you can view this. They paid about $6.7 million for this, roughly. And this is in the form of they have $6.16 million in cash. And it says, subject to working capital and indebtedness adjustments, which there's a lot of verbiage. There's a very long document. I think this is it. This is how long the document is. It's how many pages? I don't even know. A lot of pages, 50 something pages, and I've skimmed through this. I haven't had time to read through it in detail to understand specifically, what these adjustments are. But there's some adjustments that are done here. But basically the purchase price is, a tad over $6 million in cash up front, and then about another $500,000 that they said it's in the form of an unsecured, non-negotiable promissory note. Doesn't really bear interest in this. Is, it's all cash that's going to be paid out for the acquisition. So in total, paid out $6.7 million. And just as a general note here, if you do, read in here, there's a portion of that, about 10%, that is not paid out initially. It's held, I think, what did I say, up to 12 months. Just, sort of like as kind of like an insurance, for the performance of the indemnification and other covenants, blah, 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 right? Some things that the seller has to do under the agreement. So there's at least this other chunk that is technically a part of the closing of the purchase price, but it's not actually being paid immediately. It's being held back, and I guess will be paid out at 12 months after the closing, assuming all these conditions have been met. So that's how much they paid. Now the other question, the other big question that I would ask is like, okay, this is a company. What was the state of the company, right? What was their revenue? Were they making money? Were they profitable? And what assets did Knightscope actually get? And so that's, the meat of what I want to talk about today. And I mean, I'll just state up front, there are still a lot of unknowns, right? There's CASE, I believe, was not a publicly traded company. They certainly didn't list it here or from anything that I've been able to find today. If I'm wrong on that, then I'd be super happy to find out that I'm wrong so that I can actually look at some of their, financials and SEC reported numbers. But I do not believe that they are a publicly traded company. So we kind of just have to look at the, breadcrumbs that we get from this, from the filings today and from their actual website, what we can find online. But I called out here the CASE in 2021 generated over $5.4 million of profitable revenue. So they have $5.4 million of revenue in 2021. I did a quick look, and it looks like CASE was founded in 2008. And so it's hard to say what their growth rate is, but probably they're not, still massively growing, especially if you look at the timeline. It seems like maybe there was some maybe this company in some form actually existed even before 2008, before Case Systems was actually founded. Because it sounds like maybe there was some prior company that had some of these things, some of these call boxes. So it seems like maybe their growth rate was even slower than calling them a 14-year-old company. Maybe it's some of it actually predates even before 2008. So anyways, if we go back to this and we say, well, let's just assume that that's roughly the same revenue run rate that they're at. The fun part of this is KSCP Emergency Systems was actually at a higher made more money than Knightscope, right, in terms of the revenue, right? I think the Q2 numbers for revenue were just tad over $1 million. I think it was $1.04 million or something. Multiply that out by 4, and they're at just a tad over $4 million of revenue. And so Case actually had about 30% more revenue than Knightscope, which is interesting. But presumably Knightscope has a much higher growth rate at the current moment than Case. We don't know for sure, but that would be my sort of assumption. Now, they called it out specifically in the press release that this was profitable revenue. So Case is actually generating profit. I think that's actually very interesting, right? And we don't know specifically. We don't know how much. What the profit margins are, and we also don't know. What does this mean in terms of profitable, right? Because profitable is an ambiguous term. They didn't specify they have positive, GAAP earnings, or they're, positive EBITDA, or, they're have positive, gross profits, right? Like there's a number of different things that you could say, you could point to and say that's profit. But they really didn't specify, and I haven't been able to find any additional details in my poking around today. So we're kind of at the mercy of just speculation for that. So I'm not even going to guess on what their profit is. But this is at least good for Knightscope if they did, even if the profit, if they actually have some, earnings, that's actually a really great tailwind for Knightscope. And I think would be really good for them to be able to, trade some of the cash that they had for an actual base amount of profitability to help, get the company on a more sustainable path. So I think that's pretty good. The other interesting thing is, if Knightscope to some degree is being valued off of its price to sales, Knightscope was being valued much higher than what they paid, what they valued Case at. And granted, I'm sure that there's huge differences between the two companies. But I think was just an interesting thing that I was thinking about today. All right, so what did they actually get from this that's going to be massively beneficial, right? Because I can't imagine certainly they didn't buy them just for the profit, right? They're not just investing. This is there's actually I think a couple different things that they get from this, right? The obvious one is they called it out that Case has over 7,000 devices currently deployed in the US, right? These are all target customers for Knightscope to sell to, right? To cross sell to. And the 7,000 devices, I'm sure it's probably significantly less in terms of customers if you assume each customer has, take a guess on how many devices, average devices you think each customer would have. Is it 10? Is it 100? I don't know, but that's somewhere. Let's ballpark it and say it's probably between 100 to 1,000 clients, and these are folks who have a large enough physical presence. They have the potential for emergencies to happen, right? Potential security issues, and they've said that it's they've invested money to attempt to solve this problem with the blue light phones, or some sort of a phone. And I think hi Walkaza, thanks for hopping on. Let me know what you think. I think this was a big announcement today, and I'm sure you have thoughts as somebody who's followed Knightscope closely and has had a lot of interest. But so I think that's obviously a huge benefit for them, is being able to cross sell to these, again, I'm ballparking it at probably somewhere between 100 to 1,000 clients that they have here that are, I think, super qualified. Like this is exactly Knightscope's target market, and so that's fantastic for them to do that. And again, part of this part of the agreement is they are actually purchasing the company, right? And they are actually going to, somewhere in here talks about them trying to keep on the employees basically, and continue operating the company. And they're going to have salespeople and customer service folks presumably who have relationships with these folks. And I know that it was on the I think it was on the YouTube video. I wrote it down where Bill explicitly listed out that they have clients. They have airports, they have law enforcement, and they have education, and then the federal government, right? And so that actually I think is really, really interesting as well. Think about federal government, as we know, Knightscope has been working towards getting the FedRAMP approval, and once they get that approval, if they also now have some folks who have existing sales relationships with some federal government agencies, that could really help things take off for Knightscope. I think another big thing that they're getting here, they call out here, are production and logistics facilities. And I think this is something they touched on in the last, investor day or town hall or whatever it was called, right? Where they said they were looking to open up a production center. I think they even said in Texas. I don't know if this was partly what they were talking about there, and maybe I'm misremembering. Maybe it wasn't specifically Texas, but I know they mentioned something about opening a production facility. They're gonna need this, obviously, if the volume of deployments is gonna ramp up, right? And they're gonna want to do it someplace that's not in California. And yeah, so I think that's that's a big thing for the company, especially as they start getting, if they actually ramp up the volumes as well on the K1 hemisphere. And I think that was another thing that he mentioned in the video. It was sort of not explicitly called out as like, well, this is going to help with the production, but he called it this is going to help with their with the K1s. And if the volume actually increases for the K1 hemisphere, they're gonna want a real production facility to manage that process and be able to have that be its own thing, separate from, we've seen some of the photos on the Twitter stream of their production room in Mountain View there, and I can't imagine that's going to really scale, to the volumes that they want to grow to as a company, and that they now have more potential for, since they have all of these new customers that are very, very highly qualified leads. So I think that's another big thing. One thing that they're getting here is they're getting oh, sorry, Wakaza, you're talking. Wakaza says, I did message you on your last video to answer some questions and give you a heads up on case. Thank you. Yeah, sorry, I haven't gotten to get through all my comments. Life is busy sometimes. And Wakaza also says, I'm excited about the case acquisition. Great move by Knightscope. I agree. I think there's some major, not to sound like I'm like a business leader from the 80s, but I think there's actually a lot of synergy between these. And the 6 or 7 million, let's just round it off, call it $7 million that they paid is, it's a good chunk of money. But I mean, if they're also getting some amount of profit from this, in terms of what Case actually was doing on top of all these other benefits, I think that was a great move by Knightscope. We'll have to see what the numbers actually turn out to look like in the future. But yeah, I think it was a great move by Knightscope as well. I agree 100%. One of the things that they're getting with this company that might benefit Knightscope, it's hard to say, but they haven't actually made a lot of, it's not public, we don't know, but we don't know how they're doing necessarily in terms of things like, service and customer support, right? Because I was actually poking around their website a little bit, and they talk about, some of, where is it at? Which page was it on? One of the pages here, it says, hey, I copied it into my notes document. I was trying to find it on their website, but I can't. Let me just, might have been under support. I don't know. Anyways, somewhere on their website, I think it's in the about page. I wrote it down. Where's it at? There we go, right here. Sorry, apologize for that, bouncing around. Our technicians will visit you on site to inspect and install your equipment. They also say we offer unit monitoring as well as full service maintenance plans to suit your unique needs, right? And so they have Case Emergency Systems has technicians, right? They have the support model already figured out, right? They have 7,000 devices deployed, right? Knightscope has, let's call it 100, somewhere in that vicinity, right? These folks, granted, I'm guessing they're mean time between failures for these phones is probably much lower than the robots, but they've figured out, how they can support 7,000 devices being deployed, right? They've scaled this up. They thought about this for years at this point, and for them, this is potentially something that Knightscope can now leverage, right? However, it is that they were planning to service all of those, all of those units all across the United States. This is something that I think Knightscope could leverage and benefit. And so I think that's actually one sort of non-obvious benefit that they could get from this acquisition. And so yeah, that's I think a lot of what they're getting. I think it's great. Well, Kaza says the case products will be a great need here in Hawaii. Why is that? I don't know. I don't know what's I don't know that much about there in Hawaii. But so I'd love to hear more about the your thoughts on that. I'm gonna keep going talking about some stuff while I wait for you to respond there. But one of the questions here, right, is like, how do they actually pay for this? And they did give some details in the filing state. I don't know if it was in the press release. If they talked about the notes. Yeah, they did. So they talked about they took on some convertible notes. Well, Kaza said, after the Hurricane Ian, the Department of Emergency Management are rethinking how they do business. These products will help. I got you. That makes sense. That makes a lot of sense. Yeah, cool. I mean, it's kind of like a more of a boring product, right, than security robots. It's not quite as exciting, but it's something that provides a lot of value, right? This is sort of like a, yeah, I guess you just call it like a boring, more sleepy business. It's probably just super, but probably has been steadily growing for years and years and years. And yeah, I think it's pretty cool. Moving on, I was going to the convertible notes. That's right. So they didn't pay all this, $6.7 million was not cash directly off of the books, right? They took on some debt to do this, some convertible debt. And the details are here in the 8K if you want to dig through it. I'm going to try to go through some of the highlights here. So they took on, $6.07 million, just call it $6 million of convertible notes. They actually received $5 million here, right? So they got $5 million in gross proceeds. Granted, they also had to pay a chunk to the placement agent. This is 4.5%, which seems like a lot of money, and I assume that's 4.5% of the $6.075 million. So they paid, $273,000 to the placement agent. So net, they actually got more like, what's that? $4.7 million in cash from these convertible notes that they could put towards that 6.7 million, right? So they paid probably about $2 million off of their balance sheet, not the full 6.7 million, not the full 6.7 million dollars, as of today, right? And by the way, they did say that they intend to close this very, very soon, right? On October 14th or as soon as possible, right? So they intend to close it this week. But so in terms of the convertible notes, right, the initial conversion price is $5 per share. And so I thought that was pretty interesting that they set it, pretty at about double the current stock price. They did also issue them warrants, $1.1 million shares worth of warrants at a strike price of $3.25. So slightly above the current trading price. But that will add even more dilution if Knightscope does appreciate in value and these warrants are exercised. So these actually don't, the convertible notes don't accrue any interest, don't pay any interest. Again, it is just what I said before, where they got $5 million, but the actual principal amount of it is $6 million. So they basically just got a discount up front on the issuance there. And they will have to pay back the principal, quote unquote principal, even though it's more than what they actually borrowed, in installments. It starts in, can't tell if it starts in March or April. The wording is slightly different a couple different places here. I'm not going to go into details here, but it looks like around March or April of 2023, they're going to start paying monthly installments of about $337,000. They have the option to pay this in stock at kind of a discount to the trading price of the stock and in the prior day or the trailing 20 days, or they can just do it in cash, right? So that is something that we should see, right? And the details are right here. I'm not going to go into it here, but if you ever want to look at it yourself, like if you're watching this after the fact, feel free to pause the video. You can read this here or just look through the 8K yourself if you want to get into details. But they do have the option of paying this in stock rather than in cash. Personally, I think the major discount they would be providing in terms of the stock would actually be bad long term for the company. But hey, if the company is really short on cash, like, this might be the better way to go. We'll see. Anyways, in the end, this could result in quite a few shares being created, right? Just some napkin math. If these actually if they paid all of that principal back in, if they were paying it back in cash, and let's say the company is doing well, so the stock price is above $5, right? So if these all get converted at $5 per share, right, with the between the notes and the warrants, we'd be looking at like 2.3 million new shares being created, thanks to these convertible notes and the warrants. And I think that could turn into even more. Could turn into even more shares if the company decides to pay back the convertible notes, the principal repayments that they have to do in terms of, pay that in stock rather than in cash at those times. So we'll see how that goes. It could turn into even more dilution, but, we'll have to see. As it is, the 2.3 million shares, if they get converted at the $5 strike price, and of course the warrants that are fixed at $3.25. I mean, that's quite a, it's quite a chunk, but it's not massive, right? It's less than 10. It's like more like, off the top of my head, about 5% dilution in terms of the total amount of the company. I think that's a fair amount if they're able to actually get, like I said, the synergies in terms of cross-selling to a lot of these clients and production facilities that are strategically important for Knightscope at this point in their growth. So overall, I think that was think it was really good. I don't know, Wakaza, if you have any other thoughts. That was basically what I wanted to go through today and talk through. I don't know if you had any questions or comments. Anything further, I should say. I appreciate you being on here and engaging with me. There aren't too many of us who follow the company and are super vocal about it. Yeah, another note just for anybody, if you're still watching and you didn't also see this, although I'm sure you did, that they're going to have a town hall tomorrow at 5 p.m. Pacific time, and so that will be interesting. I'm going to try to go to that and attend. Maybe I'll try. Yeah, I don't know. I've seen other YouTubers maybe like live stream events like this. I don't know that I would want to do that. I don't know that I have too much to add in real time to the event. It would be kind of fun to have sort of our own chat going, but otherwise I don't know that's really worth that much. Anyways, Walkaza says, thank you, Dustin. Mahalo. Well, thanks for watching, and yeah, I think I will just end it here. So thank you, Walkaza. Thank you, anyone else who is watching this either live or after the fact. Appreciate it. And have a good one.